While John Boehner worries about his job, the jobs picture for most Americans seems to be improving. In the month of December, private sector hiring jumping by 215,000 jobs. That is according to payroll processing firm ADP. It was the largest monthly increase since February for what's ahead in the labor market and also what companies are currently dealing with. Rob Basso, president of Advantage Payroll Services, is with me. First, let's talk about these numbers that we got today. Big jump for December. Is this a big turnaround, do you think, for the labor market?
I think it is a big turnaround. I mean, look at last month. It's almost 100,000 jobs more than the previous month. Now, you could say, okay, there's a lot of retail jobs in there having to do with the holiday season, but I do think because of the 25,000 small business jobs between 19 and 49 employees that were actually created, it's going to be a big boom for America, and I hope that we get the same numbers in January.
One of the things that many of your clients, I mean, you're a payroll processor.
Right.
The payroll tax credit, that expired. That break is now gone. They've got to readjust, but that didn't end until the very last moment. Well, January 1st, to be quite clear.
It did.
What are they going to do?
Basically, now your Social Security tax went from 4.2% to 6.2%. And for those people that already ran payrolls in the new year, they were withholding at the wrong amounts. Anybody that wasn't using a payroll provider, they have some catching up to do, and they have to make sure that their tax tables, in fact, the 2013 tax tables just got released this morning before I came on air with you. Our office has just got notified, and we're starting the programming now. So it could take up to 40 days.
Just released the tables.
We just got them this morning. So ourselves and the other payroll processors in the industry are going to have challenges for the payrolls that are running today and tomorrow. It's going to take us about 48 hours to get the programming.
Within 48 hours, you're that confident it can happen this quickly?
It is.
But now you're an expert in this. You're a payroll processor. What about small businesses across this country? What are they going to do?
They're going to have significant challenges because it's not just the 6.2%. In fact, Medicare is actually going up for those wage earners that earn over $200,000. It's going from 1.45% to 2.35%. If they're not calculating these things already, they're going to have to play catch up. This kind of confusion could have been solved if we decided this last week or the week before. Small business owners are going to struggle with these decisions as the month goes on. You
know, Rob, this is a big market story. I want to let all of our viewers know the market's obviously having to digest all of the news that we're getting. Thank you for the commentary on that side of it. But right now, I want to look at the market reaction to the jobs picture. Our next guest has basically his crystal ball out right now. He's looking into some things in 2013. He says some big things are coming. Take a look at this. He says the S&P 500 is going to hit a record high. He says small caps are going to beat large caps. Emerging markets are going to outperform the S&P. And he says the Fed's going to break its pledge to hold rates steady through 2015. Rob Morgan, Fulcrum Securities Chief Investment Strategist, joins me now. I was reading, believe it or not, on New Year's Day, Rob, your note about 2013. I want to ask you about this, your prediction about the Fed. You think that all bets are off in 2013?
I do. I think growth is stronger than a lot of people think, Cheryl. And, you know, QE first has got to end, and it will eventually. But I think by the end of the year, the Fed is going to be telegraphing and actually beginning to raise rates.
All right, you think that they're going to raise rates, but at the same time, you're making a big bet on emerging markets. So you're saying overseas, even though the S&P is going to hit a new all-time high, overseas is the story.
We've got a big global rate cut cycle going on, Cheryl, and so that's going to help international markets, and obviously with our rates beginning to nudge up, not in a dramatic way, but nudging up. That should really help the IFA, as I mentioned, and overseas markets in general.
And the IFA up about 14% over the last year. I do want to say that. Now, there are some sectors. One of the best performing sectors, again, was the financial sector, Rob. And you say that financials are going to kick us off. So at least for the short term, you're looking at financials.
Right. Do continue to like financial, Cheryl, even though, as you said, they had a pretty good year last year. They're still relatively cheap because they got so beaten down after the financial crisis. So look for continued improvement.
And also you're saying industrials, which I think is interesting just because the fact that that group as well had a huge jump for 2012. But you're saying stay with it for the beginning at least of this year.
With the financials, it's more they're cheap. With the industrials, I think we're seeing some real earnings growth there. So that's more of a growth story, I'd say, Cheryl, with industrials. Yeah.
All right. So you like industrials and you like financials. We're going to see what this year has to bring. I do want to ask you, though, Rob, and I want to bring Rob Basso back into this. I've got Rob and Rob today. I'm a lucky girl. I want to bring back in Rob Basso into the conversation because obviously the market story is the unemployment picture. We're going to get the jobs report tomorrow, Rob Basso. I want to find out what you're expecting from our market's perspective.
Well, you know, I think unemployment is going to hold steady. I really don't think we're going to see a market change from past week. And if you're asking specifically how I think the market's going to react to it, I'm not really sure. I think they're going to be optimistic about what the unemployment numbers are going to bring. I'm hoping that the small business market is going to prop it up, and we're going to continue to see hiring in those sectors.
Rob Morgan, you also are, some predictions as well for the year on unemployment, but you're saying about 7% for the year. You're pretty confident.
Yeah, well, I think through the year we're going to continue to see unemployment trend down. As far as a particular number, and Rob and I were talking about this during the break. The ADP employment report and the non-farm payroll report, they're not really correlated so well. So even though ADP was great, it wouldn't surprise me if non-farm disappointed. But I think if you look at the body of work of non-farm payroll through the year and the unemployment rate, I think we're going to see a trend down.
Rob Basso, you were talking about the payroll issues that these small businesses are going to have when they try to make the switch now with the extension of the payroll tax. Small businesses, though, do you think that that's where we're going to see growth in the job market? Do you think they're going to hire, considering what they're dealing with tax?
Well, 12% of the growth that we saw this past month in December was from small businesses under 500 employees. So I really think they're going to be the lead the way through 2013. What I hope happens is there's more public offerings, more smaller entities that are growing that move into the public realm. That's what I hope to see.
And Rob Morgan, you like small caps, which, if I'm not mistaken, that's a switch for you from where you were at this time last year. What changed your mind?
Well, I think, the dividend tax rate's going up, and of course the big caps are the big dividend payers, but the fact that the dollar, I think, is going to start nudging up, that hurts large cap multinationals. And also just as a rally or a bull market, and this is really the fourth year of the bull market, as it moves along, we see performance expand and broaden out to the small cap sector. So I think a lot of different factors there are pointing to small caps, but it is a change.
I think the group of companies in this country that we're going to have to watch is going to be those with 50 employees and under, because they're not going to want to go above 50 employees because of healthcare costs. Anyway, we're going to have to follow that as well. Well, gentlemen, thanks to both of you, Rob Morgan, Rob Basso. Great to have you both. Two of my favorites.